Welcome back to Golden Roll Radio.
Welcome back, Robert.
Yes, I'm back too. We're going to start this week's show with the current prices and then move on to year-end prices with the anticipation of what's coming this year. Miles, what's going on in the metals today?
Thanks, Robert. Let's go ahead and kick it off with gold, since gold continues to lead the charge, although not over the last week or two, as we'll look when we see the ratios here. So gold is currently sitting Wednesday at 1285.20. Now, we got as high as 1288, right into that range that we had on our charts last week. So I'd be expecting to see a little bit of a cooling off period as it kind of finds its high point between around 1285 and 1310 with a potential correction back down. So we're at that magic 618 fib that we've been calling for a while, and we showed on the charts last week. So we'll see how it plays out here in the first week or two of January. Like I said, I'd expect to see it kind of level off here between here and 1300, maybe slightly higher with a potential correction following.
That's gold, now silver.
Yeah, as far as the white metals, like I said, gold had been leading the charge up until the last week or two. That gold-silver ratio has gone from around 88 down to 80, just under 83, and silver has taken a pretty big charge leap up to the 2017 low and the 50% line. So gold's still on the long run leading the charge. Gold hit that 50% line a month or so ago. Now silver's finally hitting its 50% line. I'd expect the same since silver took such a massive jump up from around 1450 to 1550 in the course of a week and a half. I'd expect to see a little bit of sell-off in silver, although if it moved up to its 618 fib, that'd be pretty bullish in such a short time period. For those of you waiting for silver, we know it's right around the corner. That ratio is starting to show the cracks as it pushes back down slightly. Now, obviously, it's got a lot of room to go, and silver has a lot of room to go up, but that's the point, right?
It is the point. Why don't you finish out the white metals, Miles, and I'll get into sort of an end-of-the-year recap.
Sure. Platinum, on the other hand, is still sitting at the low end of its trading range, just at the 800 mark. It has quite a ways to go to play catch-up to what gold has been doing and what silver is now doing. We've got some interim stopping points in the 830, 840 range, but ultimately we need to get up around 875 to 900 to start arguing anything positive for platinum. So I think one of our listeners pointed out on our show last week, the real ratio to be watching is platinum right now, and I completely agree. I think platinum is the sleeping giant and should be showing the best potential gains when these metals really start taking off.
And by ratio, you're talking about platinum gold or platinum palladium ratio.
Exactly. Both of those ratios look very strong for platinum right now. I think you said a couple weeks ago that the platinum gold ratio is at the lowest point ever, if I'm not mistaken.
Right.
And then obviously platinum palladium ratio is substantially inverted to where it should be.
Well, and one that's always left out is platinum to silver ratio. You know, that end of the year at 51 to 1, and the long-term average is closer to 90 to 1. So again, showing the undervalued aspect of platinum.
Rounding out the white metals, palladium continues to compress at the top end of that channel. Could be running out of steam here. So palladium is right around 1265, 1270 today. I'll have a couple potential correction marks on the chart here, but it can go a long way down and still be considered bullish. I mean, well down into the 900s and still be in bullish territory from 1200. So we've had such a massive run up in palladium that it has a lot of wiggle room before anybody could consider it turning down. So what likely ends up happening here is it takes a little bit of a sell-off, if not maybe slows down its pace of growth over the next couple years, and lets platinum play catch up. Yeah,
so without beating it up too much, guys, I want to kind of summarize 2018, and we'll put these numbers up on the screen. For the year, gold declined 2% to close at 1278.40. Silver declined 8.5% on the year and closed at 1548. Platinum down 15%, as you were alluding to, you know, Miles leading the charge on the way down, closing at 795. And then palladium was the one lone wolf that took off and went the other direction, which is what we've seen put a lot of pressure on the ratios. It went up 15% in 2018 and ended the year at 1227.20. Now, all that being said, as you know, we focus a lot on the ratios on this show. So where did they end the year? 83 to 1, as Miles already said, on the gold to silver ratio. Again, long-term average, you're closer to 32 to 40. And so that strongly favors silver, and that's actually down from 88.1, though, per the recent silver rally. Platinum to gold ratio, 0.62 to 1. That's the most extreme in history. Platinum to palladium, 0.65 to 1. And we've only seen that one other time in history. That was back in 2000, and it didn't happen before then. And then the platinum to silver ratio I mentioned earlier, 51-1. Again, that long term around 90-1. So each new year brings new opportunities, new outlooks, but we've got to look back a little bit and bring it to a close. So let's jump into what you guys see really kind of coming down the pike here this coming year.
I'm going to step out and make some general predictions. One, I think the main prediction here would be that we have a theme that was somewhat suppressed for the last couple of years with Trump in power. I think we have a theme that was prior to that. If you think about as Trump was being elected, that night, as you look at the markets, go look at the markets that night, gold was moving higher, big time. The stock market was crashing. That's what I think the real theme will be that reemerges this year. We've already seen it in this last quarter, this last fourth quarter of this year. Right? If you look at what has happened this last quarter, the stock market, S&P down, gold up. We've had a lot of callers calling in asking about what's going on in the markets. Gold's not doing a whole lot. Well, it actually is. It's acting as that hedge of what you want it to do when we have market volatility in the stock market. So theme for this year, I think we have a reemergence of trouble in the markets, concern, uncertainty.
Yeah, Robert, I completely agree. I mean, Tori and I talked last week about the Dow inching towards that first bearish territory down, just under 20% at one point in the fourth quarter.
Before they reversed it.
So we saw such huge volatility in the Dow this past year, 2018, and we ended up going ultimately just about nowhere. I mean, granted, a 5% overall loss for the year feels pretty substantial, especially when numbers are as high as they are. That's thousands of points in loss on the Dow. But ultimately, we were up as much as like 8 or 9% at one point. We were down as much as like 14% at one point from the year open. So to end up kind of right in the middle, what you're seeing is sort of a panic and volatility that we hadn't seen in a while. Markets always end in a bang. 2017 was a bang. It was real predictable, sloping upwards, ending with a pretty aggressive dive up into 2018. And then throughout 2018, you had nothing but fistfights up and down. Are we at the top? Are we not at the top? Is this the end? Do we have 20,000 more points to go?
Are we at the bottom or are we not at the bottom?
Exactly. So, and ultimately, we ended up going nowhere with a whole lot of weight and money getting thrown around, placing bets on either side of that.
Well, there's no doubt that interest rates rising is affecting all of that, right?
Oh, for sure, right? I mean, most importantly, the economic uncertainty, right? People just don't know. And what you also don't know is when do rates start rising through the Bank of Japan or through the European Central Bank. Now you're going to see a global reach and a global impact. We already are seeing that because the U.S. dollar has ripple effects. But Robert, I'm with you. I don't want to be overly negative or pessimistic going into the year.
Let's be realistic then.
There you go. I think it is. It's just reality. I do have two quotes. The first one's Don McAlvany, quote, "The worst is yet to come. Everywhere we now look, we see risk escalating dramatically," unquote. Okay, that was back in November. And that to me is another uncertainty issue. You've got risk that's escalating. The other one's John Stockman, who was in the Reagan administration. "We're going to be in a recession and we're going to have another market correction, which will be pretty brutal." Okay, now that we know has already initiated. We see it coming. But in addition to your interest rate comment, I think, yes, those progressively rising, interest rates that are making debt burdens unbearable around the country and the world is a key point. But you also have debt. So the suppression of the theme, to me, also goes to the debt issue. President Trump has spent more now to increase our national debt than any previous president, far more than even during the Obama administration. Our debt is just a hair away from $22 trillion. And had they passed this budget deal in 2018, it would have been right there to exceed the $22 trillion. So that's going to happen in 2019. We're going to exceed $22 trillion. What does debt do to you as a household? What does it do to a country? What does it do to the world when you have over $250 trillion in debt around the whole world?
And what's scary, Tori, is even though debt's been coming up, we're still at some of the lowest interest rates in history. So what happens when they get back to levels similar to the 90s or let alone the 80s?
What if they just go to 4%? You're talking about a double in your debt service obligations. Who can handle that in their monthly budget?
with interest rates rising, the attention gets turned to the dollar and its reaction to the interest rate that the Federal Reserve continues to rise, even though Trump doesn't really like that. We're going to see more of that play out, I'm sure. Things are happening so quickly these days. I mean, look at just in the last 2 years that Trump's been in office. Everything just changes with a simple tweet. And so it's really hard, I think, to analyze and determine what the dollar would do this year. I will say it's kind of at a point where it needs to do something. It's right here, this 96, 97 range. I'm going to say that it's probably going to go down based on the euro-dollar pair. The European Central Bank, in the big picture of the big scheme of things, I like the word scheme because that's what all those little fiat currencies are anyway, total schemes. I'm going to say that the dollar is headed down almost solely based on the fact that the European Central Bank is not doing their bond buying program anymore, meaning they're not printing money out of thin air to buy their own debt, or the countries that make up the EU. So with that, when the U.S., when the Federal Reserve did the same thing, when they wound that program down, the U.S. dollar rallied after that. So I'm guessing that the euro is going to rally after they stop doing this, which pushes the dollar down and then therefore gold up. That's generally big picture what I think is coming.
I appreciate the simplification of it and the beautiful complexity, because that's exactly what I think will play out as well, Robert, this year. And everybody keep in mind gold reacts. And if you wonder, I know, Miles, you can probably attest to this too. Robert and I were talking, we keep having clients saying, well, what should I do with my gold and silver IRA?
It's not really doing anything. Yeah.
It's just,
but it is.
It is. So we're going to throw a chart up here that we put together, and that's just showing gold versus the S&P in the fourth quarter of 2018. If you're wondering why you own gold as a hedge, as a balance to your portfolio, this is why. Okay. So come what may, with all this uncertainty and the talk and the concern and the potential drop in the dollar, it's okay. It's not fear-mongering. We're not trying to instill any sort of overt concern in you. Just keep in mind that it's time to be prudent, take action, and keep on keeping on.
So briefly before we close, we do just want to extend our deepest thank you to all of you, our listeners out there. We just finished up our second year of Golden Rule Radio. So thank you guys so much for these last couple years. We're so excited to keep going. Looking forward to more listener interaction and questions. Please keep getting involved. And as always, if you have any questions or want to talk to any of us personally, you're welcome to give us a call at 1-800-525-9556. You can head on over to our website, McAlvanyICA.com, Facebook, McAlvany Financial, or Twitter @ICA Gold.
Thanks for listening and Happy New Year.